Hello, welcome to Crux Investor. We caught up with Ali Haji, who is the CEO of TSXV listed ION Energy. They have got a lithium brine project in Mongolia on the Chinese border. He talks us through how they're going to tackle that project this year with funds available to them and runs us through what the team's experience is in country. Interesting conversation. If you want our thoughts and opinions on it, on the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There are commentaries from experts from around the world on a variety of macro themes, companies and commodities, which you might find insightful. There are training courses on there to help you with your own diligence process. Plus, we have summaries of interviews that we've done just to save you some time because we know you're busy. And if you want to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from judgment, trolling and abuse, you go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like. It'd be appreciated if your thoughts below. Get back to everyone. And if you want to see precisely what we talked about with Ali today, take a look in the description below. Ali, how are you doing, sir?
Doing well, Matt. Thanks for having me. How are you?
Not too bad, not too bad. I think you're going to be the last lithium company we interviewed for Lithium Week, which was last week. So welcome aboard. Welcome aboard.
Thank you. Thank you. It's a pleasure to be here.
Well, fantastic. So where are you?
I'm in Toronto. We're just coming out of sort of the lockdown phases here. So retail's finally opening back up. Some sort of normalcy returning to daily life. So can't quite complain.
Fantastic. I listened to that with great jealousy. We're about a month away. Right. Well, look, we're going to hear your story today. We're going to ask you a few questions about what your plans are. But before we do, give us that 1 minute overview of the business and I'll pick it up from there.
You got it. ION Energy is an early stage lithium brine explorer in Mongolia. We formed the company back in 2017, August, sort of when we were advising a step company going public. We looked at the battery metals industry, decided that, in fact, much like everything else, battery metals are cyclical or resources are cyclical. Let's look for lithium in Mongolia. Mongolia being as vast as it is, a country in which we have a fair bit of experience. We began the process of identifying lithium in country. Back then, in 2019, we were granted an 81,000 hectare license of potential lithium brine. It is extremely close to the Chinese border and the largest land package ever given to a public or private company by the government in Mongolia. So it's an extremely exciting prospect that we're currently working on exploring.
Absolutely. Okay. Lithium's sort of seen a little bump in the last 3-4 months. Equity prices have been shooting up. Price of lithium, all the different variations of lithium are going up too. So in terms of timing, very topical, but do you think... Actually, do you know what? Let's start with the plan. What did you set out to achieve? Because this is, and I get the 2017 component, but really this took off halfway through last year.
Yeah, absolutely. So 2019, we were granted the license. Would have loved to be public by PDAC, but then we were dealt with the pandemic. And I think as a company, we sort of saw it coming back. So battery metals making a comeback. Last summer was instrumental in really pushing that equity market forward. We got our conditional approval from the TSX in April of last year. Went public in August of last year. And since then, we've been trading on the TSX Venture under ticker ION. And we went public on the back of the renewed interest, we'd say, in battery metals, mostly prompted by government spending. But when we started trade back in August, we were pretty slow out of the gate. As you so rightly pointed out, the last few months have been rather compelling. It'd be foolish not to look at the equity markets in the lithium space. I think it's one of two reasons. One being the fact that there's a lot of retail sentiment that's being poured into these companies, vastly around the successes or the overvaluation of certain electric vehicle manufacturers that are now catching up to where they should be. But ultimately, everybody's been able to benefit off of the renewed interest in battery metals. And much like ourselves, I think, we went public at a fairly low valuation of 15 million post-money. We were able to sort of fill that gap through execution over the last 4 or 5 months that we've been trading. And we rode that wave in January. And, it'd be silly not to admit that. So we did have some real good trading days, some really good increments in price. We still believe we're undervalued relative to where we should be, given our asset, our proximity to market, and our team. But the markets are in fact, I think, steadying in the last couple of days.
They are steadying, but normally CEOs, I expect them to say that, but it's such early days. You haven't really done anything. I get the big land package, and I get that it's next door to China, but you haven't done anything yet. So I mean, talk to me about what it is that you're trying to build and the process that you're going to go through to get to that point.
Absolutely. So we added on a gentleman by the name of Don Haynes, and we'll talk to his experience in just a second. But we commenced exploration in October of last year. It is a very early stage project. There've only been a couple of drill holes on the project thus far in recent history. And we've shown grades of up to 811 ppm in some cases. The impurities, so the potassiums and the like, are fairly low. And the exploration program that commenced in October includes a geophysics CSAMT program along 2 line strikes, 8 by 12 kilometers long on 2 targets. Those will give us the conductivity of near surface ore, if you will. And then we'll move on to microseismic. So microseismic will give us the thickness, the depth, and the potential width of those aquifer bodies beneath surface. After which point we'll be deploying our truck-mounted auger rig. So we acquired that back in 2019. It's on site. It's capable of going down to 20 meters to pull up the brine samples that we believe are beneath there. So you're absolutely right, Matt. It is early days, but the prospectivity of the license and the study of the geological sort of makeup of the license are quite promising thus far.
Why Mongolia?
Mongolia is a country that we've been in for over 10 years. My chairman, Matt Wood, sort of went in there early days and looked for, he ended up there in 2009, actually. He's a gold geologist by trade, Rio Tinto scholar. He's founded multiple companies around the world and exited. But when he went in 2009, he looked for gold. He just happened to be there during the last coal boom and in fact ended up accumulating a number of coal assets on the back of 20 million Aussie that he raised on the ASX. When he acquired these assets, he de-risked them significantly and built a package essentially that he would then exit to Banpu of Thailand for $500 million 18 months later. So that was really our first foray into Mongolia. It's a country that we know quite well. We've always operated as local operators. So everything Matt's done there has been staffed by Mongolians. In fact, half my board is Mongolian. And we in essence have a history in country. Beyond that, in 2016, right prior to founding ION, I was out there advising a company by the name of Steppe Gold. Steppe Gold is today a commercial producer. And again, 98% of the staff is Mongolian. Half the board is Mongolian. It's truly a country that we know quite well. That's extremely underexplored. So only 3% of the company or the country has been explored, which means you have the likes of Oyu Tolgoi, Rio Tinto, massive copper gold deposit there. The resource richness of the country has yet to be really developed and understood, and we're fairly comfortable working in that country. And as a result of that, we've focused primarily on Mongolia.
Right. Okay. So dint of history is why you're there, but the experience lends you to believe that you can operate in the future on this project. It's a very large land package. Why did you go for so much?
Why did we go for so much? It's the Indo-Arctic Basin that really excited us. I think one of the things that we've seen in the Lithium Triangle is you might have a number of different companies share that Indo-Arctic Basin. And ultimately, the analogy that if everybody's likely the folks that have seen me speak about this before will know this saying that I like to use. And it's ultimately whoever has the longest straw drinks the juice. In our case, it's 1 cup, 1 straw. So having control of the entire basin was what we went after when the government was working to put it up for tender. And we believe that controlling that basin in its entirety helps to monopolize the company somewhat as far as control to lithium in that basin region in the South Gobi.
So under what terms have you picked it up? What did it cost you and how much money are you expected to spend over what period of time? Because most governments would expect you to spend money or relinquish property.
Indeed. And the Mongolian government is much like any other government in mining jurisdictions. So you would look at spending a minimum amount for exploration each year. The fees associated with that are quite minimal. In fact, they're 50 cents per hectare to show that you've spent on an annual basis when you're in the exploration phase. You can carry an exploration license for 3.5 years, apply for renewal of that exploration license 3.5 years later, and then ultimately move to a development license beyond that. Mining and then development beyond that. So in our case, we raised $2.7 million when we went public last year. That was sufficient to cover our exploration costs on Bawaiul, at least the early stage exploration, including auger sampling and geophysics and CSAMT. That would cost us about $1.2 million. We paid for now half of that. Mongolia is a relatively cheap jurisdiction to work in. because of mining, and we paid for half of that now. So we expect to spend the rest of it over the course of this year, and we very well may accelerate that a tad as we progress through the year on the back of the renewed interest in battery metals. So we've talked about Bab Hayol, and that is, indeed our flagship license at 81,000 hectares. But as of 2-3 weeks ago now, we acquired Urgakhnaren. Urgakhnaren is rising sun. That's how it literally translates from Mongolian, so quite appropriate. And that resides in the Dorngovi province, so one province west from Sukhmatar. That's 19,000 hectares. So we currently control about 100,000 hectares inland.
That's great. At some point, you're going to need to start raising money in an environment which, as you say, is quite buoyant. Battery metals in general, buoyant. Lithium at the moment, buoyant. Until there's oversupply. So how do you think you've timed this? What gives you confidence that the market's going to be there for you when you need to go and raise capital?
I think, we've, as you rightly pointed out, buoyant, and we've had a number of instances where we've been offered capital at these levels, and we've had to respectfully turn them down. As a junior miner, is that the wisest decision? You might be chuckling, but we have to be quite sensitive to shareholder dilution and shareholder value. We know that we raised sufficient capital to explore and de-risk Bab Hayol, and we know we have a bit in the coffers to look after Urgakhnaren. But we did issue a warrant, a full warrant, when we went public, price at 40 cents. We've been trading in and around the 50 to 60 mark for the last little while here. So those have started to organically convert and recapitalize the treasury. That'll allow us to fully explore, if they were all to convert, both projects in a more accelerated timeline. But we also have a focus of mirroring what Matt did with Hunu, which is to acquire additional licenses in country and ultimately have a controlling stake in the majority of lithium-bearing licenses in country. So our goal there would be to potentially look at financing at a future date at a higher currency on the back of the valuation gap that we believe is yet to be filled. And that additional capital would help execute on the acquisition and exploration strategies.
It's interesting because you've got it's so early, you've got lots of routes you can take, lots of options that you can go down, and it's very hard for me to unpick what it is that you're doing because you've got to make those, you've yet to make a lot of those decisions. So talk to me about the team's experience and give me a sort of sense of what sort of business model you might be employing going forward.
Sure. So when we talked about Hunu, that was purely an acquisition, de-risk, and exit strategy. ION is going to be following a very similar strategy in that we will be acquiring assets that have had some work done on them, de-risk further, and then bring in a strategic or a major to take either a majority JV stake or an ultimate exit entirely. It is not our hope as a company to bring these assets to production ourselves. We don't believe that we would be able to do so in the current environment, but we'd also want a strategic to come in with the necessary experience to take things forward. As far as the team is concerned, we've had a multitude of mining investment professionals on our team. I'll talk about myself first. I've had over 11 years of experience at Invesco. I started my career as an IT asset management analyst in Toronto. I sort of put on the special acquisition team and moved to Hong Kong to acquire AIG's real estate business. Then moved over back to Toronto to work on Morgan Stanley Van Kampen's acquisition by Invesco. I worked on a number of strategic objectives to make Invesco a global entity because it operated as a sort of separate a company with separate entities around the world. Beyond that, I was put in London. I lived in London for 3.5 years, co-leading a center of excellence in the investment operations space. So you might ask, where's my mining experience? And that's a valid question because you do require mining experience to run a mining company as I'm doing today. My father has been in mining since 1998. We've had some very, very low-grade copper mines in Zambia that we've shipped concentrate over to China. So it's sort of in my blood, if you will. My chairman, Matthew Wood, serial mining entrepreneur by trade, an individual that has founded, funded, moved to production, and then exited multiple companies around the world. Hunu Coal is really one of his first forays into Mongolia that I mentioned earlier. It was a $20 million IPO on the ASX and then a $500 million exit 18 months later. But he's also the founding chairman of Avanco Resources in Brazil that sold to Oz Minerals for $440 million in March 2018. He's also the founding chairman of Step Gold, who is now a commercial producer in Mongolia, producing 60,000 ounces annualized. So that's the sort of entrepreneurial and geological background that comes from Matt. And it's a very, very rare thing to find, I think, where you have a strong geologist with a strong entrepreneurial capacity. The second individual on our board, Matt Bata Tumur Ochir, he is one of two Mongolians on my board. He is a special advisor to the Minister of Mines. He was with the previous government, reappointed with the existing government, so speaks to our ability to be politically agnostic in country, if you will. But he's also the chief executive of Step Gold today. Anil Varaj is a board member. He's an ex-investment banker, Goodman Dundee. Helped fund some of the deals that I think you would have been talking about over the course of the Battery Week, including Namaska. He's raised over $1 billion in the capital market space in the last 12 years or so really strong capital markets experience there. Angtushin Kishiksuren, he is our second Mongolian director. He is an exploration guru, if you will, has spent a fair bit of time exploring the Eurasian region, credited with finding multi-million ounce gold deposits along the border with Russia as well. So, you might be asking yourself, where's the lithium experience? And that's all extremely valid. We added, on the tail end of us going public, we added Paul Fornazzari as our one of our advisors. Paul Fornazzari was the original chairman at Lithium Americas. He was a director at Neo Lithium, and he's a partner at Fasken. He led their LATAM mining group, global mining group. So he's the individual that brings in that real strategic sort of start to finish acquisition through the exit scenario for us. He's helping us develop as a company where we will be in the coming years, as well as helping us through our acquisition strategy as we start to execute.
It strikes me that team is a team who likes to do deals, and this is a team constructing a business, not necessarily a lithium business. It doesn't matter to you, I suspect, if it's a lithium business or not. It just happens to be the case here. Certainly with your experience, and even if I look at Matt Wood, I think the Honey deal was huge, but that was what turned around in over what period of time?
18 months.
18 months,
yeah,
right? So
period.
This is deal. So he wasn't delivering value onto the ground per se. It was about the construction of deals. So I'm just wondering, again, I want to know what I'm buying into here. And I've no problem with it because there's lots of ways you can play this. I just want to know which way you're playing it so I can jump on board if I'm comfortable, right? So
absolutely.
So you've got a large land packages. So the view is what? Keep raising money, diluting, but building value through drilling, exploration, and so forth, or you're bringing in earning partners who can bring the capital in because you own the land, right? So what is the game plan here?
The game plan is ultimately that of de-risking today with the current capital in the bank, bringing in additional capital to allow us to do a little bit more work on the ground. Beyond that, it would be a JV type scenario. So bring in the likes of a CATL, or bring in the likes of that could be Neo out in China that's looking for an offtake style agreement. Those individuals or those parties would ultimately help fund further with an ownership stake, and then be a sort of ROFR, if you will, when it comes time to exit as an acquisition or a divestiture. Right.
Okay. But there's what I mean? There's a market play. There's the big headlines that you need. Spend a little bit of money. I'm not sure it's going to get Qatar in here. So, how much more money, how much more time from you before you can genuinely have a conversation from a Qatar or a Ganfeng or any of the other kind of players you might want exposure to close to China?
Yeah, I would expect that towards the end of the year, we'd be ready to have those conversations. That's quicker than most. Going from sort of exploration to understanding your resource would be, or even going into production would be 6 to 10 years for most mines in the lithium space. And for us, it's more so we can look to de-risk a little quicker, one on the back of the solid in-country team that's able to execute on exploration. But beyond that, I think if you look at the brine or the ultimate geological features of this Indo-Arctic basin, what we're told is once we're done our geophysics, once we're done our CSAMT, and we're going out there with our auger rig, we're able to pull up a number of different samples from beneath surface, getting an average sort of grade across that Indo-Arctic basin, given the volume of that aquifer. We could quite rudimentarily say, this is our estimated resource. It's not bankable. It's not a pre-feasibility. It's one that's on the back of raw data that shows us ultimately what the volume would be multiplied by the average grade. At that point, you start to get these majors interested. For companies that will remain unnamed today, There are groups in China and internationally that are currently acquiring. It may not have to be battery grade just yet, but they will do the refining on their end and ultimately bring it into their production spheres or through vertical integration. So our intent is, let's get them in early on, around the end of this year when we've done a fair bit of work to de-risk. We can accelerate those programs over the course of the summer with the warmer months. And our currency will react accordingly when we put out the news to market. And we'd expect to have them sort of participate or at least begin early conversations towards the end of the year.
So it feels like you're kind of shortcutting a few processes there, because if I do look at the Millennial Lithiums, the Neo Lithiums, the Lithium Americas, all these kind of brine projects in South America, you're coming at it differently. You're in the South Gobi Desert region, so it's kind of comparable in many, many ways. But they've taken a long time to get to the point where they're comfortable having those sorts of conversations. What gives you confidence that you can encourage some of the bigger players to come in and talk to you at that point? And on what basis?
Proximity to the market is a big one. China being the consumer that it is, the behemoth that it is, with 53% of all lithium being consumed by the country, 73% of batteries being produced by the country, 80% of lithium being refined in country for use around the world. Europe's playing this massive catch-up game, and they quite rightly have to do so as a result of the carbon taxes that are going to come into play in short order here. What we've seen is that while we're this close to the behemoth, and we know that supply is greater than demand. Rather, supply is less than demand today. We've seen that in the increment in prices for lithium carbonates and other lithium byproducts in China already. I think Benchmark mentioned 68% in the last week or so. So seeing that uptick and knowing that the demand is increasing and that China is right beside us is quite exciting to us. It tells us that they're going to want to come in at some point to secure their supplies. Very recently, Ganfeng put a brine asset in production in China, or they invested a fair bit of money in a Chinese brine asset. So we're starting to see a fair bit of interest come in from that regard. The folks that we've added to the team with the likes of Paul Fornazzari, as well as some other relationships that we've built along the way in the last 10 years, have the necessary relationships to bring us in front of those strategics. So we expect to have those conversations in and around the end of the year.
Right. And are these just conversations, or are these something more meaningful?
It's likely, we wouldn't be having them if we didn't think they would be meaningful.
No, but I mean financially. Lots of companies talk about, we're talking to people all of the time because we want to know what the potential is and when.
Of course.
You've got to keep financing this thing. So you may raise some money. You've got a little bit of money now. You may raise a little bit of money this year to accelerate an exploration plan, but to be able to do a kind of back of a napkin type resource guesstimate, to be able to have these conversations. So will those conversations allow you to go and get more capital because you know that at least people are listening? Or do you think you can talk to these sorts of Chinese players who perhaps are used to shortcutting processes and get them to start putting money on the table?
Yeah, I think we'd get them in for a toehold, right? Have them take a chunk of the company today, have a vested interest in our success. That would ultimately allow them to be an offtake partner, and then ultimately either an acquirer or a majority JV partner as we look to exit. How
do you think the market would react to having a Chinese partner on your?
It's that's an interesting question, Matt, and I say this because Mongolia is sandwiched by Russia and China. The Russians and the Chinese are the Eastern powers that be. The relationships with the West are I don't want to call them strained, but they're not as strong as they once were or will ever be, I think, in my view. So Mongolia has what's called a third neighbor policy today. And what that is they would incentivize us working with additional countries outside of China or Russia. So as a result of that, the taxes would be less. We know that the Germans have a fantastic relationship with Mongolia. And they lovingly refer to it as Mongolai. But BMW has been in country. BMW has looked for lithium in country. We know BMW is one of those countries at the forefront of developing their own cells in Europe. And on the back of that, while the Chinese might be, the potential suitor because of their proximity to our asset, I think the options are still vastly available to us in terms of who might be the potential JV partner or suitor in the future. China is the natural fit purely based on proximity, but I think that there's potential outside of that as well.
Right. How long do you think you're going to be involved with the company?
I'm going to be involved until exit, I believe. It's sort of my baby. I co-founded this thing. Management and insiders, we all hold a significant chunk of the company. We've all put in capital at every level, from founding to IPO. We own 36% of the company today. We're fully escrowed for 2 years, so we cannot sell, assign, or transfer a single share for 2 years. That's by design to align with our exit strategy, and we're not planning on going anywhere. We're in this for the long haul, and we're in this for our shareholders.
I like that. 2-year hold. Nice. Okay.
Yeah.
Okay.
It was 1 year, but we pushed back and said we want 2.
That's great news. That's very encouraging. I wish more people would do that, quite frankly. And if you got any sort of big names in there outside of the 36% held by management? There's
family offices that came in on the IPO that own about 8% of the company. We have Maxit Capital owns 2% via Bob Sanga. Steve Palmer of Alpha North in Canada, he owns 3%. Greg Schofield, who's Spartan Funds, he owns 3% as well. So it's really a mixed bag in terms of the actual shareholders. In terms of strategic, nothing just yet. But I would expect that may change in the coming months, as you rightly pointed out. It's important to strike when the iron's hot, and we think that time is coming upon us.
Okay, you're talking at the moment in PowerPoint about a lithium brine. You've got Paul on, who's kind of got the relevant experience. We're hearing a lot at the moment about DLE as well. I mean, again, it's early stage. You've probably got options ahead of you. So what are you thinking with regards to the actual technology, or is that going to be someone else's problem?
It's early stage to speculate until we get a true understanding of the brine as to whether or not it will be, in fact, your typical evaporation process or a DLE process. But we have the likes of Don Haynes, who's extremely technical. He's done work all around the world, including LATAM. He has been to Mongolia on 3 separate occasions. He's looked for lithium in China. So he understands the different types of brine around the world and lithium around the world. We've added Dr. Hashbat Dashtatsern. He is a PhD lithium hydrogeologist from the University of Science and Technology in Mongolia. He lives in Ulaanbaatar. He spent a significant amount of time in Japan at Akita University learning the extraction methodologies of the types of lithium in Mongolia. So it's still far too early to talk about whether we're bringing in somebody to help with this. I think ultimately there are a number of different groups that you would rightly understand reach out to me on a regular basis to have us test their technology. But I think until we have a better understanding of where we are, it's too early to say.
Okay, we've also interviewed a few companies that have tried to operate in Mongolia, haven't quite worked out. What are the restrictions? What are the problematic areas of doing business in country, given your experience?
Sure. Mongolia is, it's had its bad press, and I think most jurisdictions can say the same. With respect to Mongolia and where it is today, I've been there 7 times since 2017. I've met with different government officials at different levels in different political parties, and each one of them has told me the exact same story, which is we've learned from our mistakes. We're looking to be more transparent, and we want this to be a big part of the economy going forward. It's one of the fastest growing economies in the world today. It is also an economy that's driven by mining, so 20% of their GDP comes from mining. It's a really big part of their GDP, and on the back of that, we've had a lot of support from the government. If you look at back in 2017 or 16, we went to acquire ATO from Centerra when I was advising STEP. That was a company that we were able to get permitted quite quickly. I think quicker than you would say most get permitted in better jurisdictions, quote unquote. For that mine to go from IPO in 2018 to commercial producer in June last year during the middle of the pandemic, allowing the importation of cyanide from China when the borders are closed, tells you that the government is working with us and is a strong sort of believer of everything that we're doing. Beyond that, the government of Mongolia put in $3 million US into STEP as their first sovereign wealth fund investment. So for them to support us in that regard tells us that the country has, in fact, learned from their mistakes. They granted us the largest land package ever known to the country in terms of exploration. So that's another tick in their corner. And we've sort of had to nourish and build that relationship. And the way we've done so is by telling them that we would do certain things and executing on them. And we have the same philosophy with our shareholders. So we said we'd take Step public in 2018. It was a difficult market when resources were sort of well out of fashion. Everybody was too focused on crypto and cannabis or whatever it may have been. The only gold mining IPO on the main board that year, production last year, and then with ION 2020, before sort of the hoopla that we've seen in the last 3 months of the equity markets around battery metals, we still executed on our promise to go public. So I think having that sort of two-way relationship with government and the transparency that they're providing to us and other operators in country makes Mongolia a very promising jurisdiction.
You're an advisor to Step, and obviously Matt.
I was. Yes.
You were. You're not. You're full time now on this.
Yeah, ION is my full-time job.
Great. That's where I was going, because I think obviously Step has sort of seen a comeback, as it were, with the rise of gold last year. They're doing quite well. So as Matt, obviously he gives you as much time as he can afford to. Yeah,
absolutely. We're a very close-knit management team. We work very closely together. We speak, very regularly on all matters ION related. Everybody has a seat at the table, and Matt's a big driver of how we get things done in country.
Brilliant. Okay, so what are we looking forward to in 2021? Give me those highlights.
2021 will be, executing on our exploration strategies and completing them. I think that's paramount, ensuring that they happen unhindered. Beyond that, being able to tell the market what our early resource estimate might be on the back of our exploration programs. We've also looked at additional licenses for acquisition in country, so we might be making some announcements in that regard. There are outcrops of spodumene in country. So it could very well be a hard rock acquisition that we would look to add to our portfolio. But I think ultimately de-risking Baba-Yul, commencing exploration on Urgakhnaren, ensuring that we're at a currency that is more attuned to what the analysts have said about us, and then speaking with strategics closer to the end of the year.
How are you going to deliver how are you going to help the market understand what the early resource could be? Because the exchanges are going to have a view on that, aren't they? So here are some numbers. If you multiply some of these, you can sort of work out what we've got. How's that conversation go?
It's going to be a tricky one, to say the least. I mean, it's not 43-101 compliant, as you pointed out, but it's one that I think, as a company offering full transparency, if we were to produce, exploration results on an ongoing basis, those with technical knowledge, which is sort of the folks that we want to bring to the table towards the end of the year, will begin to dissect and better understand and interpret the data in order to see value in what we're putting out. So constant news flow with respect to our exploration programs. We're not going to hold back on anything that we start to put forward or start to see, and that'll allow folks to build their own opinion of what the asset truly involves.
Do you think you could have done this without going public?
Could have, yes, but having when you are public and 8% of your shareholders are Mongolian, you're checking off that box that says we said we'd be public in 2020. Here we are, and 8% of our investors are Mongolian. So showing them some return as well to get that bilateral support in country.
Great, Ali, fantastic. Thanks for coming and telling us that story. It's one of those sort of younger stories in the lithium space, but hopefully you're timing it right.
Thank you, Matt. It's been a pleasure.